Have you been scared off from buying a house because rates have been frighteningly high? The Sharp Mortgage team in Winston-Salem can help make it feel far less spooky. There are many programs available now that can keep your mortgage payment from making you want to scream. You will dread it if you don't call for more information today because Halloween is right around the corner. With the Sharp Mortgage team, there are no tricks, and they will treat you and the zombies you love like family.
This is the Triad Podcast Network.
Hi, everyone. Thank you for joining us for another financial podcast with our certified financial planner, Jennifer Johnson. She is with Three Magnolias Financial Advisors here in Winston-Salem. The information on how to reach her is in the show notes, and she'll get a chance to plug all that at the end of the episode. Jennifer, I don't know if you were aware, but we've got an election coming up, a pretty big one, right? We've been putting this off and trying to figure out what's the right time to start talking about the election as it relates to financial markets and things that people do or expect when it comes to election years, general election years. So in that 4-year cycle. So we are recording this close to mid-October, and we want to make sure that we get this information out with plenty of time for people to digest it as we get closer to election day. So there's a lot of different directions we can go related to financial markets and elections. But what's the specific area that we're going to focus on in today's episode?
Well, I've fielded a lot of questions all year, and maybe more so as we've gotten closer to the election date, about how the election affects the stock market in particular and financial markets, and maybe more importantly, like what should people do? So there's a lot of fear, I think, out there. I think in particular, this election cycle has maybe been more uncertain than ever. We've had we started, of course, with a Biden-Trump contest, and then Biden dropped out. So we've had all this change in news and increases, the questions and concerns people have. I think it introduces a lot of fear into the investing cycle. And of course, investing is a big part of achieving people's financial goals. Big goals are primarily what we work on, like retirement and college. And, you don't want to make a big misstep, here, because it does happen every 4 years. Certainly don't want to do that every 4 years. You don't want to do that even once, even in a crazy election season like we've had now. So what I would love to kind of focus on this time is some of the mistakes we see people making around the investment decisions close to elections or in election years, you might say. And then, just share some factual information, because luckily we have a lot of history. Obviously, we have an election every 4 years. So we can look back at those and see what are some trends that we see and maybe share that with folks.
Yeah, that's good. So we'll get into that, and as we always do, we will publish the source of this information in our show notes so you can read the story yourself. But that's kind of what's teeing up our conversation today. But maybe to add a little bit more context to some of the uncertainty and fear that you mentioned in an election year. You've said this in a previous episode, but I think it's worth going back to that. The one thing that the market tends to not like is uncertainty, right?
That's right.
Which is, it's not necessarily which party wins the White House or wins the majority in Congress. It's just the fact, the idea of we don't know which way things are going. And that tends to be what can affect the market, correct?
And yeah, that's right. I mean, so a lot of questions I've gotten have been around what if a certain party wins? What's going to happen to the market then? And of course, people have their own feelings kind of wrapped up in that. But I think you said it well there, Adam. A lot of times when the volatility we see around elections has to do with uncertainty around which direction we're going to go, because in either direction, really the market can deal with it. It's just not knowing, causes it to overreact, I think, negatively. Luckily, though, those that kind of volatility tends to be pretty short-lived. That's not something that tends to last, like if we're in a recession or something that can cause a prolonged downturn in the market. However, I think one thing that happens too around presidential elections, especially, but certainly we see it in our local elections too, because we've got some hotly contested North Carolina elections too, in that you see a lot of negative ads, right? Like you see a lot about how terrible the economy is and inflation and job loss and all these kind of things. And of course that can really get people feeling negative, about the outlook, right? And I think that just draws attention to some things that maybe be those based on truth or not can just cause sentiment to go negative, and that can cause markets to be volatile too around that time.
So in terms of the mistakes that people tend to make when it comes to how they're managing their money during election times, is that the first one where it doesn't really matter which party wins in terms of what could change things?
Yeah, I think I see a lot of things. One, where people maybe they're saving automatically into a 401k or into an IRA or any other kind of investment account, and they'll think, well, I'm going to wait and see what happens, right? They'll think I'm going to stop saving, I'm going to stop investing, and I'm going to wait and see if the party I think would be better for my investments wins, and then I'll start back. When in reality, if we look back historically, if we look back like back to say World War II time, when FDR was president, we can look back over that time period and see, to be frank, it really doesn't matter too much who wins. In that case, if you start around FDR's presidency until now, you've had a pretty much even. You've had seven Republican presidencies, eight Democratic ones. And over that whole time period, you've seen the markets in general move higher, right? I mean, it's not a straight line, certainly. I mean, it's not something where it's that consistent from year to year, but the general trend is higher. So I think people need to keep that in mind. And at the same time, well, we know markets tend to move higher. And interestingly enough, they tend to move a lot higher around and after the election cycle. So if you start like primary season and look out a year, for example, markets move stronger during that 12-month period than the normal 12-month period. Does that make sense?
It does. It does. And what I can see, there's an illustration and a graph that shows the data of what you're talking about. But it appears that going back to even pre-World War II, back into the
Mhm.
30s,
Right.
that the market, the investment would end up at a better place from the point where that particular party took office to when the party left
Yeah.
office. So when it switched from Democrat to Republican or vice versa, it's still, like you said, it's not a straight line, but it
Right.
ended up being higher than it was when that party took office.
That's right. Yeah, the general trend is definitely higher. And you notice there's probably, you have different periods there where there's a longer stretch maybe of a Democrat or a Republican in office. But it's not so much a change where you see tremendous growth under Democrats and everything falling apart under Republicans or vice versa, right? The reality of it is, I think it doesn't matter, right, as much as maybe we want it to. Does that make sense? So, in somewhat psychologically, and I remember back to the first Bush presidency when there were these ads. I think James Carville coined the phrase, "Is the economy stupid?" And so it was running on this idea of, the president needs to take responsibility for the economy. But in reality, we all know, the markets are looking at a lot of things, right? Not so much who's the president. They're looking at economic indicators like how strong the consumer is and certainly inflation. I'm not saying it doesn't matter at all, but it probably doesn't matter as much as we want it to. Does that make sense?
Yep. Yep. I think the paragraph that jumps out to me, and again, you can find the full story in from a link in our show notes. It says, by design, elections have clear winners and losers, but the real winners were investors who avoided the temptation to base their decisions around election results and stayed invested for the long haul. That really jumps out. You mentioned primary season. How does primary season, and we're past the primary season, obviously, but how does that factor into maybe some decisions that people make on this?
Yeah, a lot of times during primary season, and we might have talked about this on earlier podcasts too, we tend to see more volatility. I think speaking back to that idea that there's more uncertainty around that time period. And so as a result, markets tend to react more negatively around that. This year was a little bit different in that the market was still remained pretty strong through primary season, and then has been a little more volatile here in August and September. And it wouldn't surprise me to see more volatility as we go through this month and through November. It would be pretty normal for us to see that. But the interesting thing is, too, I think because of that volatility that we traditionally see during this year here leading up to the elections, if you look out 12 months, and this data goes back to 1932, and looked at that exact season, starting in the primary season, like maybe starting in May and looking out to May of the next year, the average return on the market, meaning like the S&P 500, is 11.3%, which is pretty strong, like a normal 1 year period, May to May, like the typical average is closer to 5.7. So it's really not quite maybe double, or close to double, right? That return of a typical 1 year period. Now, stocks, as we've said before, just aren't real consistent, right? So you have to kind of be patient with that would be the main message. But I would just share that with folks to say, just because you see markets volatile now, one mistake we see people making is they get real nervous, and they stop saving, or they, maybe worse than that, they sell all their investments and think, I'm going to wait until things settle down. Well, once things have kind of settled down with the election, the market's moved higher. And so if you do that, you've inevitably sold when things are low. And then now you're in this position. If you want to buy your investments back, there's a good chance those prices are higher. And you don't want to do that. You don't really ever want to do that. And I think what one trap is, if people try to do that, this is going to happen every 4 years. And so if you do that enough, certainly you can really sabotage your long-term returns, which becomes problematic for your goals.
Who's ready for movie night? Our friends at the Ginther Group Real Estate are proud to sponsor another season of innovation and cinema at Bailey Park in downtown Winston-Salem's Innovation Quarter. The final film of the season is Hocus Pocus on October 18th. Bring your chair or blanket to Bailey Park for a great night of cinema from Aperture and beverages and food from a variety of local vendors. Pre-film fun begins at 6:30 p.m. and the movie begins at dark. These magical movie nights are made possible by the Ginther Group, the real estate experts we trust and showcase right here on the Triad Podcast Network. Check their social media for info on each upcoming movie night. And for your real estate needs, call 336-283-8689 or visit theginthergroup.com. Buying, selling, investing, or just learning. Whatever you need, start now. And like me, you can become a Ginther Group client for life.
Life is full of celebrations, birthdays, holidays, life milestones, and so much more. And who has been helping generations of families celebrate these events? Our friends at Dewey's Bakery. And even if you aren't planning for something in the near future, you don't have to wait to enjoy something savory and delicious from Dewey's. Maybe you just need something to get you through your Mondays. Drop by every Monday for a free Cake Square Day. No purchase necessary. Just come celebrate the start of a new week. So, if you're hearing this ad on a Monday and you're in your car, reset that GPS and get to one of their 3 Triad locations immediately in Winston-Salem at Thruway and Renolda Manor, plus one in Greensboro at Friendly Shopping Center. And any day of the week, You can find the perfect item with fast and easy ordering options at local.deweys.com. Plus, Dewey's does so much to help celebrate our community. To date, they've given back over $4 million to local schools, churches, and other nonprofits. Your next celebration isn't complete without something special from Dewey's Bakery. Dewey's, celebrate every day.
We ask people to bookmark this, put a calendar reminder for
Right.
primary season, January through May of 2028.
Right.
And so that you can remember that if you see volatility in the market during primary season, we're not guaranteeing anything, but the data in the past has shown that is a normal thing and it bounces back once we get through primary season. Again, that's just what the history tells us. But as we say, past results are not indicative of future performance.
Right. We definitely have had, a couple of times when when things have been negative. So the year 2000 will be a good example of an election season there in which, that would not hold true. It would be down. 2008 would be another example too. But I think if you can know, if you were an investor during those times, you realize that had little to do with the election itself, right?
Yeah.
So the year 2000 had more to do with bubbles, around the tech sector. 2008, of course, was the Great Recession and had a lot more to do with real estate and some other things that caused a huge recession, not so much the election. And so that's what I was trying to share earlier, in that people, kind of want to point to the election as being the main driver, when in many cases it's not. Yeah, the one thing we see during an election year is a lot of times, because we know where most money is going, and the majority of cash goes into money market funds during this time. But if you think about it, back to this idea of markets being down as we lead up to an election, particularly during primary season, when things are down, that creates your best opportunity really to buy. But if you're seeing a bunch of negative ads and you're real nervous about who's going to win, you have strong feelings, which there's nothing wrong with having strong feelings, but just remember, with your investments, you don't want to let those emotions drive those decisions.
Yeah. So as we've been talking about this, we say, okay, traditionally this can happen around primary season, or traditionally this can happen right around the time when the election takes place. Or even if you want to project it forward, this is what happened. This is what has happened in the past when the inauguration comes around in January and it officially changes hands. But how much how much do you see from the data in terms of people trying to time the markets when they're doing their buying and selling?
Oh, there's a lot. Yeah. I mean, you just see a lot. I think it's a lot of folks feel like that timing is that they can do it, because an election, I think it's unique about the election. We know that date, right? So I think there's a real temptation for folks to say, well, I'm gonna try to time this. I'm gonna sell my stuff now, or I'm just gonna put, like we said, put stuff in the money market, put any investment in the money market, and then I'm gonna buy it later. There's a real danger in that, though, in that most of the time that does not work in your favor. Now, in no way am I saying does that never work. If we look at these cycles, they've got a really good study here, again, going back to 1932, that we can point to. And the majority of the time, that's 23 different election cycles. 17 of those times, you're better off to remain invested, right? So 17 out of 32 times. There are times in there, like we threw out a couple of, election periods, the year 2000, the year 2008, in which that did not work in your favor, so you could possibly be better off to not remain invested. However, to your point, Adam, timing is always really difficult. So even I remember being an advisor back at those times, for that to work, you think about 2008, the bottom was in March of 2009 from the Great Recession. So not many investors in my experience that went to cash in 2008 or stopped saving in 2008, have the courage at the bleakest moment to then buy their investments back or, start really aggressively saving. A lot of times things look so dire that they wait until there's a time in which investments, they feel better about it. And by the time you feel better about it, the market, particularly, I think, as quickly as things move now. Oh my goodness. I mean, markets just move so fast today compared to when I started as an advisor, like 20 years ago. It's just so different. So I think it's just that idea of you're going to time it. I mean, I think it's a fool's errand, to be honest with folks. I think, is there the chance you could get it right? Sure. But the odds are very much in your favor of having an investment risk tolerance, an investment strategy that's appropriate for whatever goal you're saving for, and just know these volatile times are part of investing, and to just be patient and know, hey, particularly for those of you that are saving into an investment, if you get some crazy times here where the markets are down, know that and have the confidence that, if you continue on that cycle, you can kind of use those to your advantage.
Okay, so to recap, the mistakes that people tend to make during election time is they might worry too much about which party is projected to win. They might be scared or spooked by primary season volatility, which is something that has happened in the past pretty consistently. And then to your point, the fool's errand of trying to time the markets around certain political dates on the calendar or time ranges. So we know what the mistakes are, and I think you've explained them well, and you may have offered some of this advice already in some of these in these elaborations. But if you had to, boil it down to some simple things or easy to remember things, I guess I should say, not necessarily simple. How do people avoid these mistakes?
I think, I think one, remembering that volatility is normal, right? And
election year or otherwise.
Yeah, very normal. If you feel good about your strategy, and it should be, now's a good time to take a look at that. If you're not sure you're in the right strategy, get some help. But feel confident in the long-term strategy and not get too caught up, in the news or the volatility that you might see in the markets. So one, I think, maybe, I don't know if it's right to say turn off the news, but don't get too caught up in, what you're seeing on TV, particularly like if it's economic ads, that are delivered by one party or the other. Because it's the message is always going to be, if you're running against a party that's in power, you're going to point out all these terrible things, right? And so, and I don't know about you, but it feels constant when I have the TV on, these same ads just beating us over the head about how bad everything is, or how bad it could be. That's another point, I guess. Like, okay, if you're in power, if this other person gets in power, they're just going to destroy everything, right? So maybe one thing, if I could, I'm not saying people should be uninformed, but I think this constant replay of negative ads, don't let that impact your investing. Okay. Does that make sense? As maybe a simple thing you can do. So one, definitely, ignore maybe is too strong a word, but that should not factor into your long-term investment strategy. So remember that some of these things you see there maybe aren't as impactful as you might think on your investment strategies.
Yeah, I think regardless of what you feel about the state of our current economy, that we just said, we're not talking red or blue or anything like that.
Right.
No matter which party has been in office, and this is data that goes back almost a full century, right?
Right. Yeah, that's right.
It's the trend still goes in the right direction over the long haul. It has in the past. And so, yeah, Don't. It's again, the ads are designed to do something in terms of your emotions.
That's right.
And it's supposed to be jarring in terms of getting you to act a certain way. But
That's right.
trust the data. Trust the
That's
data.
right. Yeah.
And the data we've illustrated what some of the data has told you in this episode. So
That's right.
Jennifer, well, I look forward to when we get together in our next episode, maybe talking about something other than politics.
Yeah.
I know we got
Maybe we can
a
put it
few
behind us.
ideas. We got a few ideas in mind, but I'm sure it'll come up again in January when we see we're going to see a new president in the White House, regardless. And so, I think we might talk about what things are going to do when we get to the new year and a new president and all that in January. So, but when we get into later in November and December, we'll get into some other things that people might enjoy hearing about as well. So, if you could maybe just tell folks where they can reach you if they want to talk about their own investment strategies and situation.
This is a time where people, reevaluate things and may realize they need more guidance. So feel free to reach out to me. We're a local company, here in Winston-Salem. You can call us even at 336-701-1600 if you'd like. We do have a website, Three Magnolias Financial Advisors.com. That's all spelled out, and I'm sure we'll put that in there. And you can email me individually, which is just my first name, Jennifer, at the number 3 dash or hyphen magnolias with an s.com. So if you're not sure that you're in the right strategies for your goals, for your comfort level, especially during these times, which create a lot of uncertainty, would be glad to talk to you.
Securities offered through Private Client Services, member FINRA SIPC. Investment advisory services offered through Three Magnolias Financial Advisors, located at 110 Oakwood Drive, Suite 480, Winston-Salem, North Carolina, 27103. Three Magnolias Financial Advisors and Private Client Services are not affiliated. Private Client Services is under separate ownership from any other named entity. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. All economic and performance information is historical and not indicative of future results. The market indices discussed are unmanaged. Additional risks are associated with international investing, such as currency fluctuations, political and economic stability, and differences in accounting standards. The views depicted in this material are for information purposes only, and not necessarily those of Private Client Services. They should not be considered specific advice or recommendations for any individual. Neither Private Client Services nor any of its representatives may give legal or tax advice.
This is the Triad Podcast Network.